So it'd be good to understand how to sort of, assess bridging loan-based financials. And if your spreadsheet helps with that, that would be very kind.
All right, okay. The benefits of using bridging is that it's quick. You can buy stuff quick, and it doesn't have to be mortgageable. So if you're looking for a refurbishment project, that's what bridging is for. They know exactly what they're lending on, unlike, well, mortgage lenders. But I guess you know the benefits of bridging by now, and I'm not a bridging lender, so I'm just an investor like yourselves. I'm doing projects, and I found that, well, when it comes to bridging, there are certain costs, and it's not always clear what is the actual total cost of taking out that loan. And that was really the intention of creating that, well, small calculator. I mean, it's just a one-pager, but it gives you that, well, that certainty of, well, this is the actual cost of that loan. And should I take out that loan, or is it more feasible to arrange finance from somewhere else? And so that's what I built for myself. Let me just share my sheet. So I'm just showing you, if I was to use my own sheet, this is how I use it. Okay. And then you see what are the important points. So I'm calculating the loan for a certain duration, because you have some fixed costs that you have to pay regardless of how long the loan is. And then you have your monthly interest. So that's why I'm making the assumption of, for example, 8 months. That's how long I need to stay on that bridging loan before I can replace it with a new mortgage. Your project would be a bit more complicated and it needs time for some planning application. Then I would say maybe write 12 months in here, and just to be on the safe side. But it sounds like you have a very, well, straightforward one. Building an extension is not complicated, very straightforward. So it sounds like you could do with an 8-month bridge. So, and by the way, this is not financial advice. It's just how to use this sheet. It's the 4 different percentages, which you most likely will get from a bridging lender. It's just they're written everywhere and anywhere, but you will come across those 4 percentages. First is the loan to value. Currently, we see in the markets that 75% is quite normal. There are some lenders that do a little bit higher, but then their fees might be higher. Obviously, you can always do less, but around 75%, that's what we see in the market is reasonable. Yeah, first starting point is your purchase price. That's what they lend on. In a worst cases, they say, well, our surveyor says it's only 160. Maybe change lenders, change surveyors. Then the next column is arrangement fee. That's basically they're covering that they get a fee upfront for just taking out the loan, and that is anywhere between 0.5% and 3%. I've seen. I just take an average of 2%. That's the most lenders are taking 2%. Obviously, you would take the offer that you have gotten from a bridging lender, and then you see, are they charging 1%, 1.5%, 2%, 2.5%? What is it? But 2% is roundabout right. Then in the next one, at the end, when you repay the loan after 8 months, then they might charge you another exit fee. And that is, again, how many percent is that? I have seen lenders that don't charge exit fees, and we also have used some. So maybe here I would just say, right now there are lenders, plenty of lenders that don't charge an exit fee. They only charge you 2% upfront, and you can repay whenever you want without a penalty, basically. But then you go to a different lender and they say, well, actually we charge 1% upfront and 1% when you redeem. At the end of the day, it's the same amount. It's just a different way of charging. Yeah, and then the interest rate. Every month you get charged interest rate. How much is it? And we see rates starting from 0.5% per month. So that's obviously 6% a year, up to 1.25%, maybe even 1.5%. Majority is maybe around 1%. That's a safe bet. So that's 12% a year, what they're charging. So I would put that in, whatever you're getting. And then you have all sorts of other costs. that are not a percentage. It's just a one-off fee. And yeah, that is every lender might call it a bit different. And yeah, you can just change the name of this, but I've listed up 6 different ones that just keep repeating in different like wording. If you go through a broker, you have to pay the broker. For me, I class that as that's the cost of arranging that finance, and therefore I include it here, because I might as well just go directly to the lender, and then I don't have to pay the broker fee. But am I getting the best deal then? I don't know, because I only go to one lender. Yeah, might cost you $4.99 depending on what broker you use. Then a valuation fee. Some lenders just do a desktop valuation, so they just log into some portal and they get a valuation. Sometimes they need to send out someone, so it depends on what the property is. So it can go from nothing up to, I don't know, $1,000. It's case by case. Let's just say they also charge $4.99, so a physical valuation can take place. An asset manager, I've seen that floating around. Doesn't happen too often, so let's leave it at 0. You need to take out some insurance. They just charge you for it. You pay legal fees, and that is not for your purchase, but that's for the legal fees incurred by the bridging lender. You just have to pay everyone's solicitor. Yeah, $1,000 is sort of what they charge. Yeah, when you pay back the loan, it could be just like up here that you have an exit fee that is a percentage of the loan, or they just have a small admin fee, which is more reasonable. That small admin fee is more likely to happen than the percentage, but I would list it up as that. Yeah, and that's all that you have to consider for the costs. I'm not saying this is everything, it just gives you a starting point where you now see that taking out this loan costs you probably $16,000. And if you calculate it just like a credit card company or whoever car loan, you will get to an APR of around 18%. And that is the headline figures is usually this. This is what a broker tells you, what a lender tells you. They say, well, it's 1% a month, so it's 12%. But by the time you add in all the other fees that you have to pay to get that loan, you're getting to way more. Keep in mind that this calculation does not take into account what they actually give you on the first day, because there are some lenders that charge you the whole interest up front, and you have to pay all of these costs up front. So instead of giving you those, so this is the 75% of 185, they might give you this amount minus the 16 grand. And just in case you repay the loan earlier, then you get some interest back. So that can also be an option. So for me, when I'm doing a deal, then I just put those 16 grand aside, because I know I will use it, just not all at the beginning, but I pay the interest and serve that, and I might have some redemption fees. But you need to be aware of all those costs. With buying properties in cash, how many more properties can you buy before you run out? It's probably fairly quickly. So there's a lender giving you money, it just costs 18%, and it's your job to make that profit back.
So I've always shied away from it because it just feels like an unknown territory for me. But would you say actually it's not an unreasonable path?
It helped me building my portfolio quite quickly because I need less money to buy a property. And I can buy more properties at the same time. The only thing I have to look out for is, am I accounting for those costs? Am I buying at the right price? And am I then adding enough value so it justifies those costs?